I would now like to introduce today's presenters. Eric Simpson, Managing Partner at Everest Group, ensures that the firm's portfolio of research capabilities comprehensively addresses the entire global services space across geographies, services, and sourcing models. Michael Jansen, Chief Research Officer, guides the practice's research agenda and architecture by leveraging his extensive experience to identify and unlock emerging trends. Jemette Aurora, Partner, leads Everest Group's research offerings focused on enterprise executives in IT, sourcing and vendor management, and shared services. Debbie Hamill, Chief Executive Officer, has been involved in outsourcing for 25 years, has been CEO of AOP for more than 10 years, is a champion of women's empowerment and diversity, and passionate about impact sourcing. And with that, I'd like to turn things over to Michael.
Thank you, Keely. And I just wanted to introduce Debbie again. She's going to say a few words. Earlier this year, we partnered, became the research partner for IAOP, and we did this study in conjunction with IAOP and also a broader organization that's been established this year called the Global Technology and Business Services Council. So we appreciate the opportunity to speak not only to our Everest Group friends and family, but also the broader audience that she can talk to. Debbie?
Thanks, Michael. Hi, everyone. Thanks so much for inviting me to share a few words. Access to cutting-edge research is critical to making decisions now, as well as planning for the future. And this is why I was so thrilled to have formally announced Everest Group as IOP's official research partner. Everest Group has been a longtime supporter of IOP, and this partnership takes it to a new level, allowing us to bring more and custom research to our membership in ways we could not do before. I had a sneak peek of today's presentation when it was delivered at our Global Technology and Business Services Council Forum a few weeks ago, and I found it both surprising and uplifting, and I'm sure you will too. Again, thank you so much for inviting me to share a few words, and thank you so much for the partnership. Have a great webinar.
Thank you, Debbie. All right, let's get into the content. And what we wanted to start with was just actually a reflection and looking back at how we entered the year. And so I pulled the slide that we used talking about the context for this time last year. And if you look at it, we were talking about a slowing economy. We were talking about the US and European elections. We were talking about Brexit. We were talking about China-US tariffs. We also had a lot of conversation around how our policy was determined by Twitter. I'll leave it at that. But Eric, how did this year really go?
Well, I think we've all had a very different year. Despite all the things that happened with COVID, at least most of the people I'm speaking to here the last few weeks are ending the year in about as good a posture as they could have reasonably expected, in contrast to how they were feeling at the end of March. I think the resiliency that we saw in the mass migration to working from home, the stability of the telecom networks, and just the general stick-to-itiveness of all the people making it work and adapting has been extremely impressive.
All right, so as we look at 2021, we've coined a term called Pentup Optimism, or Pentup Optimism, if you will. And if you think about what we experienced this year, and got a representation of a nearly deserted Times Square, which is not really the real world. The real world has Times Square is part of the city that never sleeps. But our feelings and the thing that we want to leave you with throughout this presentation is, while the numbers don't show it yet, we do believe 2021 is going to be a year that looks very different than this year in many different regards. So the hopes are pinned on the vaccine being 95% effective, And we believe that while the first half of the year and the end of 2020 is going to be pretty challenging from a public health standpoint, as we look forward to the second half of next year, we think we're going to see a very different world. And so whether it'll look exactly like this, I do believe that there is going to be that sense of optimism and the impact on our businesses and our personal lives is going to make the second half of the year, depending on where you live and how the vaccine rolls out, it could be the best year we've seen maybe in our total professional careers. So let's go with that, and let's look at some of the data. So as Eric mentioned, the data actually showed us that the year wasn't as bad as we might have thought, given all the turmoil. If you look at the data last year, we entered the year roughly the same as we're entering or ending this year. Last year we were 79% were met or exceeded their targets. This year it was 72%. So given all the turmoil, I'm actually pretty impressed that only roughly a quarter of the audience is thought this year was a tough year from a business perspective. If you look at it on a regional basis, what you're going to see is very similar results on the next slide. Yes, so if you look at here, Asia Pac, Europe, and North America, we broke the data into 3 segments, and you're going to see roughly the same mix. So not a big change from region to region in terms of the sentiment coming out of this year. So let's get a sense by doing our first quick poll of the webinar here, and let's think about let's hear what you think about 2021. And so, how are you feeling? How are you feeling about it? Is it going to be worse than 2020? Is it about the same? Is it a bad first half? And are you thinking maybe I've already had COVID, so nothing can stop me now? So go ahead and put your votes in. And we're seeing the results now. All right, I like what I see. All right, so bad first half, optimistic about second half of the year. Overwhelming conviction there. Usually we don't see so much of a poll coming down with these answers, but I would have to say that I feel the same. I'm looking for a breakout year. I don't know about you, but I'm kind of tired of everything we've been going through. Been very patient, but I'm glad to see people looking at this. Jimette, any thoughts as we go into some of the other additional data?
No, I think all of the indicators, both some of the lagging indicators we look at for the industry, as well as a bunch of the leading indicators that we're seeing across IT, sourcing, GBS, definitely seem to suggest that same time next year, the math will be overwhelmingly showing that we've had a pretty good year compared to 2020. Right, so no surprises, and let's hope that the number of 6% about the folks who had COVID, let's make sure this population stays safe.
All right, great.
Yeah, so just to kind of keep the thread going, right? As we also looked at some of the information, every year we ask people, hey, what are the top challenges, business challenges that you think of as you are entering the new year? And what's been interesting is we've had some changes in the top 5 list. However, the bookends, number 1 and number 5, have stayed the same. So if we look at this year, adapting to new business models, and these new business models could be work from home, could be future of work, could be ensuring that you have the resilience playbook. Some of that was the same issue entering last year. So adapting to business models is the number 1 thing that people are worried about as they're entering 2021. The second thing is around the slowdown in decision making, and I think that has impacted a lot of initiatives this year. Last year this was also in the list at number 4, but this year, people are worried about that and want to make sure that the momentum for that vaccine carries forward. So maybe we're not saying the second half of the year is optimistic, but hopefully starting into Q2. Price and cost pressure, that's been a very big theme this year. So that's at number 3. recovery from the pandemic, of course, I just think the timing of this is such that it's going to be an important issue, but it's not the #1 issue, thankfully. And then the fifth is, of course, talent shortage, right? Which was the same as last year. What's interesting is that what we don't have in the top 5, unlike last year, Michael, you were talking about earlier, the trade wars, the regulations, the tariff issues, which was, one of the top 2 issues entering this year. So interesting mix of changes people want, but adapting to the new business model at the right cost, at the right speed, remain key issues.
Yeah, I think if anything, Jamit, it's probably accelerated that need to think about serving your clients and the customer experience has actually created urgency there.
Absolutely. And as we move forward, you talk about customer experience. The other thing we wanted to kind of unpack was, okay, what are some of these business model changes you're talking about? What are these areas of innovation that people are looking for? Of course, with cost being prime, operational efficiency, how you get more for less, how you drive better productivity is #1. But then the next couple are more around the experience and digital transformation. So 2 and 3 on the list are more around the customer experience, customer acquisition. #4 is in terms of how do you implement new technology, right? I think one of the best quotes I heard this year was, hey, we made more progress in 2 months of COVID for digital transformation than we might have made in the last 5 years, 10 years. I forget the exact thing. This was by Microsoft CEO Satya Nadella. But we think that digital has really accelerated. And then launching new products, making sure that the pricing mechanisms for these is aligned. Those are the big business model changes that people are driving towards.
All right, fantastic. And so what we're going to do now is we're going to, we kind of showed you the macro view, we've shown you sentiment. What we're going to do is we're going to unpack that even further. We're going to break it down into 5 components and talk about what organizations are really doing. And we're going to start with Eric on the digital capabilities.
Great. Thanks, Michael. So as we asked organizations what are their top priorities, there were a couple near the top that are not uncommon, and we were expecting sort of the spend and cost and getting the digitization and automation lined out. What we weren't initially expecting, but makes a lot of sense actually, is just the raw data availability, cleanliness, access to it. And basically, as people have had this accelerated digital transformation that Jamit was mentioning, it re-exposes the limits of how far they've been able to push the digital transformation previously. And one of those key enablers is data to make it smart. And that scab comes off of the wound, and it becomes a big priority to really make the changes that are necessary. We can go to the next slide. And consistent with that, in terms of the actual digital capabilities that people are focused on, although certainly the analytics and AI are important, the fundamentals of cloud and cybersecurity continue to be the top ones. This was true last year, and it continues to be true now, probably with a kind of a heightened sense of what does it really mean to change business models, ways of working, relationships with clients, et cetera. So it's this re-acceleration of the need for digital transformation, I think, is both a reflection of sort of 2 things. One, initiatives had maybe not progressed as far as would have been desired in the past. And so this is getting the finishing kick in to get all the way there. But it's also imagining digital transformation in maybe areas that people hadn't thought of before or kind of assumed were wave 2, wave 3, and they weren't actively working. And now that's come into the agenda to be worked more quickly.
Okay, thank you. And so now we move on to the next area here. We're going to talk about talent. And in this case, we asked the question in 2 ways. One was we asked overall, what are you thinking about from an overall perspective at the market level? And so on the next slide here, we show the overall numbers comparing 2020 and 2021. And you're going to see, regardless of the region, a more muted response as we go into the next year. So folks are, well, we saw the numbers at the very beginning. People are optimistic about the second half of next year. They're building their budgets in a way that is suggesting a very slow start for 2021. So not looking for a lot of hiring. And then you can also take that kind of over to as a proxy for overall revenue expectations. So again, not disastrous. None of these are negative. So that should be seen as a positive all by itself. There's nothing negative on the chart here. It's just that it's not as quick a pace as we had in the previous year. If we look at it at a departmental level, and we look at this just on enterprise, and we look at it and say which departments on the next slide, what you're going to see here is that, again, similar numbers from dropping in 2021, roughly cutting in half. But for the GBS departmental view, we actually see an increase in the overall number there, nearly a doubling or just over a doubling of the number there. And that is part of the overall, part of the digital transformations, the need to drive cost savings, continue to move work to low-cost locations, doing things that great leverage for the organization. So as they move forward, they can have the growth and the agility and the customer experience that they're looking for. Now, having said that, we also know talent is, while it's not moved anywhere on the macro picture in terms of the top level, we do see it decreasing here. And Jim, just a quick thoughts on that.
Yeah, and what's really interesting for me is that the manner in which the talent crisis and how it was portrayed has evolved, right? So as we think about it, and this view, by the way, is just looking at it from the buy side or the enterprise segment. Of course, our key issues survey has focused both on recipients of services as well as providers of services. So this is a view just from the recipient of services. And 2 years ago, talent skills shortages was a top 3 issue, right? Last year, it was a top 5 issue. This year, just given what we've seen with the high rate of unemployment, the general sentiment, slowdown in decision making, it makes sense that people are less worried about skills shortages or talent shortages as they kind of enter their planning cycles for next year. So which is why we see it as no longer a top 5 issue, but a top, it's a top 10 issue even now. I think what becomes important though, as we move on to the next slide, is to think about the nature of how the problem statement has shifted, right? 2 years ago, even entering this year, talent was primarily a volume issue, or at least a big component of that problem statement was having the right quantities. I think now the nature is shifting more towards the quality, time to productivity, those types of issues. So again, as we looked at our response base for the enterprises and looking at, okay, for the ones who said talent remains a challenge area, the number one theme that they are concerned about is shortage of next generation skills. And then how do you really create the right programs to drive reskilling, upskilling at scale, right? I think this year we were in another panel yesterday, a roundtable where there was a lot of discussion around last year or this year. We haven't really seen attrition be important, but we think given some of the leading indicators, we expect attrition to start spiking in some major delivery geographies. So how you think of talent retention, I think that's important. Quality of talent, I think that's number 3. Number 4, and I think we are going to see more and more of this, is how do you really drive the right level of employee engagement in a remote working environment. In previous analyses, we showed how productivity has gone through a bit of a life cycle over the pandemic. In the first couple of months after we saw service stabilization, productivity went up. I think it stayed stable, but as work from home fatigue, pandemic fatigue has set in, we're seeing more and more instances of companies realizing that productivity levels are falling. So how do you really drive that employee engagement in a remote working environment was another issue. And then finally, how do you really create an integrated demand supply view towards long-term workforce planning?
Hey,
So,
Jamit.
yeah.
Yeah, Jamit,
Go
if I
ahead.
might, just to add in on this, I was on a discussion group earlier today with a lot of GBS leaders, and several of them had kind of an extra wrinkle into this that's probably under the talent quality space, which was that their organizations are looking at moving more work into the GBS model, and so they're needing to expand their leadership bench within the GBS in ways they haven't had to do before. And so it's sort of a quality and seniority over volume type thing they're
Yeah.
trying to balance, where normally we bring this up, we're thinking, more people to do digital things, but there's also a leadership imperative as these business models are changing that's also emerging.
Yeah, and I think if the pent-up optimism too is going to that Jamit, you talked about the turnover. I think that is going to accelerate. With velocity we haven't gotten used to, or haven't had to deal with in quite some time throughout this, and I think that'll re-accelerate the second half of this year.
Absolutely, and I think some of this goes back to explain the numbers you had in terms of why GBS organizations are so overweight when it comes to their hiring projections for next year.
So let's move on to the sourcing topic, and we've got a couple different dimensions to talk about there, Jamit. Why don't you bring a couple of those to light?
Sure, and yeah, as we look at, again, it's been a year of contrasts, right? So we asked people as part of our study, and this was focused on the procurement and sourcing organizations, as to how they expected their portfolios to evolve, and the responses have fundamentally flipped, right? As we looked at entering this year, consolidating or rationalizing the provider portfolio was not very high on people's list. In fact, from the choices we provided, it was the lowest. However, entering 21, given some of the cost pressures, given the need for operational efficiency, it is the number one issue that people are driving towards when it comes to optimizing their spend base. And the primary thesis here is we expect digital to go from pilot to program. We are better served by doing it with a handful of fewer providers. So we want to go big on a few versus keep experimenting with several. So I think that's one thesis on more of the build side of sourcing. And as you think about it from the run side of sourcing, lots of RFP activity right now. In fact, I'd say we're probably seeing more RFP activity than I've seen in the last 10 years. A lot of which is focused towards driving cost out, putting things in managed services, and then consolidating spend with a fewer suppliers, right? So the number one issue that we are seeing is consolidating and rationalizing the provider portfolio. However, if you look at the percentages for the items underneath, it is the whole thesis that we've spoken about earlier, which is everything's on the table. So we are seeing a desire to also keep the provider portfolio the same, but rebalance across the different the service providers. And then what's not really expected, and some of it goes back to slower decision making during COVID, is to fundamentally reorient and bring in a lot of new providers into the mix. Although 1 in 5 organizations expect to do that too as they are entering next year. But fascinating flip between where we started the year and where we've ended. In terms of concerns and what's really changed in terms of, okay, as a sourcing professional, what are the things that you worry about? Again, it's been such a fascinating year from a research standpoint. I'll start from the bottom. So you'll see the item third from the bottom, which is lack of innovation from service providers at 14%, right? Normally, this is a top 1 or 2 issue. You go to any survey, hey, what do you really want from your service providers? We are seeking innovation. We're seeking more thought leadership to come through. It is a luxury issue, and in a pandemic year, it's understandable that this wasn't right at the top of the list. So what was at the top of the list? I think just making sure that the suppliers, the service providers are financially stable, right? Which is fair. You know, it's been a crisis year, a lot of companies going out of business. So people are concerned about, is my service provider viable or not? And then the second most common concern that we got through our research was, what's the quality of provider performance that we are getting? And interestingly, as we look through the pandemic and think about, you know, how things evolved, for the most part, the services industry has done really well. Yes, there were some glitches, but I think in general, both the outsourced model, the offshore model, whether be it internal or external, the industry has shown a lot of resilience, which gives us a lot of hope as we look at next year as well. And Michael, you know, I know that the industry has shown resilience. This has been a very interesting chart for us as we've looked at some of the lagging indicators of performance, and examined the financial position of a lot of providers. Michael, I know you've examined this a lot. What do you see here?
Yeah, so I think that, you know, there's a couple things to take away on this chart. First of all, most of the charts, or most you see on here, are actually moving up, or at least holding steady. There's no big drop off here. You and I have done a lot of analysis on the revenues, and we did see a drop in Q2 as project work went away, but the suppliers were able to maintain a good, healthy margin, which is actually very good news for the industry. So this is not an industry in distress. Jimmy, you would like to talk about some of the different suppliers on here in general. Kind of talk to us about those in categories.
Yeah, I'd say for the most part, you know, different companies have performed differently. There's the offshore majors, there's the consulting companies, there's the infrastructure heritage companies, and we haven't seen any major surprises in terms of how the companies behaved. But even though the revenue picture looked different and there were challenges to revenue growth, operating margins for a lot of these companies have stayed healthy, which suggests that the industry as a whole is performing well. So if you're a sourcing leader worried about the financial stability of at least your tier one suppliers, what we're saying is there's nothing really to worry about here. Interestingly, the tier twos have also done well, right? But all in all, it's a picture of strong recovery and some strong momentum for outsourcing activity entering next year.
I think there's some benefit, no doubt, here was immediately accrued to the bottom line of some of these suppliers because they didn't have to pay the travel expense. So they actually probably benefited there. But as you and I have looked at the leading indicators, and you talked about proposal activity being very strong, we've also looked at some of the leading indicators, and they're all looking very healthy as well. So you look at the bookings part of the conversation, which is not just the revenue, looking very positive.
Absolutely. And then finally, you know, just looking forward, what are the big expectations that companies have from their service providers next year? Productivity as the top of the stack. I think in general, productivity is a big issue for companies. Going back to the key initiative we identified earlier, operational efficiency, doing more with less. So productivity is right at the top. Ensuring service quality, building flexibility into the contractual mechanisms, and then how they drive the adaptation to new business models and bring innovative ideas are the rounding off the top 5 expectations people have from their supply base going forward. Michael?
Okay, so let's look at this from a from an overall perspective in terms of satisfaction. And we talked about it from a revenue standpoint. We talked about it, showing some chart on margins. If you look at it from a satisfaction standpoint, the industry did perform quite well. yes, I can assure you that people have planned for buildings being down, applications being down, computers being down, network being down, but nobody truly planned for a global pandemic with the whole world going down kind of nearly at the same time. And while there were some reported issues that we heard about, the overall service provider that was able to step up, if you will, and you do see, roughly 8% of the users reported dissatisfaction with their suppliers, but that also implies, 92% were either neutral or even, with the vast majority of those being highly satisfied and moderately satisfied. So having been part of this industry for 3+ decades, I was quite thrilled when I saw these numbers here that said, we have gotten through this industry from a service provider enterprise relationship standpoint quite nicely. Some of those key things that are driving that satisfaction is the flexibility, and I think that's where early on we had to move to the work from home. That ability on both sides, both buyer and supplier, to have that partnership mindset, the flexibility, the ability to do what it takes, not to look at the contract, not to look at the invoice or the bill, but to really communicate strongly and to do what it takes to make it happen, was really evident and help us everybody get through this. All right, Eric, let's talk about some of the different operating models, the impact of that. You're going to see some of the work from home. Not going to be a surprising number. Why don't you talk about that? Eric, you there?
Yeah, sure. So when we asked what are people's models and what's actually changed, I think it's probably not surprising, but the two big things, one, just the work from home skyrocketed. And then the second, and again, not too surprising, maybe surprising that wasn't a little bit larger, is the extent to which automation projects became more of a focus. Across the rest of it, a bit on everything. I think there's a general kind of rebalancing and sort of everything on the tables we're describing it. But the themes, once you go past the first two, vary a lot, and they're contextual to the organization starting point, the new objectives that they have, and the pace at which they're trying to pursue things. If we go to the next slide. And just drilling down a bit more on the work from home. On the left-hand side is what's currently going on, and then the right-hand side is what do they expect the working model will become in 2021. And we've vertically, the different rows are different levels or degrees of work from home. And if you look at the most sort of full-time work from home, it's sort of 30% right now, and it will. People expect that to be moderated over the course of the year and lose about 9 percentage points, which will be distributed across the hybrid. But you don't see the full work from office changing in an appreciable way. Our sense is an awful lot of the work is going to be various forms of flexibility, maybe creating rotations and different patterns for different teams, but it won't tend to be at the extremes of everything in the office or always at home. It'll be much more flexibility within that, and will create some new challenges for management, space planning, building culture, etc. Next slide, please. And then if you drill down underneath that, so how's this going to impact real estate? I think if we'd conducted this maybe 6 months ago, say in the May or June timeframe, when everybody was admiring how well work from home was actually working, you would have seen even a higher percent of organizations saying decrease. Right now, it's sort of 55% of both enterprises and providers expecting their real estate needs will go down. Sort of a third suggesting that it'll stay consistent, and then some actually showing an increase. One thing that I think is important to look at, not to bear in mind, is the community that we're speaking to today, and sort of general what we all are living in. both the GBS and the outsourcing, the offshoring, the shared services, all these things. In effect, it is part of the organizations that they're serving, but there's a large untapped piece of the work within large corporations that can yet move into the model. So these are the more judgment-oriented, the design, marketing, supply chain, et cetera. And so some of this increase may still be consistent with an overall net footprint decrease for the overall corporation. But for those in the centralized service delivery models, more is moving into the centralized service delivery models because those have both proven very good during all this disruption and the increased focus on trying to gain efficiencies. Michael, back to you.
All right, so let's talk about the global business services, and that's our final chapter here. And what we're think about global business services as being the equivalent of shared services for many different organizations. It's got different names, but essentially the infrastructure to provide many of the things you're going to see on slide 29. Eric, you're going to chat on these data facts.
Yeah, so let me break this up into three buckets. And this again builds on what I was just saying about more sort of work coming into the more centralized service delivery models. The first is what I'll call the 70s. These are the first three. They're all IT related, and in GBS world, they tend to have some exposure to IT historically, but in general, it's an area they haven't had as great a role. And so you see, basically 70% of them expecting a greater role within that. The next are the 60s. So these are the analytics and the industry specific processes, generally more judgment, potentially kind of viewed as higher value services, things that the business likes to keep their fingers on. We see, again, pretty good growth here, 60% increase in terms of the expecting growth in these areas. And then we end up with the last set, the 40s and 50s. And these are the traditional areas, maybe marketing and sales support being the exception, but the old finance, HR, contact center, et cetera, that already may be fairly significantly penetrated, still seeing some growth, but not as broad as we saw in the sort of the core things in the analytics industry and the IT oriented capabilities. Across all of them, yeah, there's a little bit where they expect some decrease, but it's a pretty small portion of the overall mix.
Yeah, this goes back to kind of everything's on the table that Jimit was talking about. I think people are and we saw that also on the GBS headcount growth too. So I think one of the things that we've experienced here is organizations are going back and using this as a chance to reset some of the previous discussions about where they drive leverage and how they drive efficiency and the quality of delivery for the organizations.
Yeah, and in particular, I think we're going to see contact center customer support be very interesting. The whole work at home agent model becomes a lot more viable, and then how you think about your talent model and attrition, and how you match supply to demand, and do you have full-time or gig workers? I think we'll just see a lot of innovation in that space. On the next slide, kind of the mix of where they've seen the geography footprint shift. And although there's, for both Asia Pac and Central and Eastern Europe and Latin America, it's sort of split, some increase, some decrease. The one thing that you are seeing is in the what you might call the source markets, where the legacy headquarters are in North America and Western Europe. There is overall a decrease here. This is consistent with what I was saying a few slides ago about more work coming out of the businesses and the functions and into these centralized delivery models, with the net effect being it's tending to move somewhere, although some of it will go away or move back to various places based on whatever is the objectives of how they're trying to optimize. But we don't see, and we don't have it in here, but if you click down with more precision on different geographies, we don't see fundamentally any geography being, winners and dramatic winners and losers within this. We think it's everybody's finding more ways to enhance their distinctiveness and play into the increased demands. And then finally, into the what GBS is expecting in terms of kind of what that nature of that footprint looks like. The bottom row are those who think this theme and their location model design would decrease. Go back to the, there we go. Those who are saying it would decrease, so the red. And then the top row with the blue is where this element of their location footprint would decrease, increase. So the big number here is geographic diversification. Only 20% thinking it may decrease, 40% expecting it to increase. I think this is consistent with, in general, people tend to put too many eggs in one basket, and then the remote working, work from home has stretched people's minds on what's possible. At the opposite end, you see the use of tier 2, tier 3 locations. So kind of going to maybe smaller talent pools, somewhat lower cost-based locations. People are actually expecting less leverage of that on whole. Again, maybe some of those are becoming completely virtual versus things are going to operate. And then finally, we see again the real estate footprint, generally a trend down, but again, some expecting it to be increasing, and then a pretty even mix on people thinking about sort of small scale or satellite centers, maybe the spokes of the delivery model. And again, everything's kind of on the table, and how people are solving the puzzle depends upon both their own objectives and the unique starting point that they have.
Okay, great. So with that, kind of concludes the core data part of the conversation. What we wanted to do is, I know that there's quite a number of people on this call here. We did want to make an offer that if there's you'd like to come and have us talk with your leadership team about this in more detail, either Jimit, Eric, or myself, or a combination of us, we're going to open up a quick poll here that you have an opportunity to say that you would like that. Amanda, if you just open it up real quick here, just indicate here, and we'll be in touch with regards. The quick poll open up, Amanda. Amanda, I didn't see that quick poll open up. Okay.
Sorry about that. We'll have to resend the option at the end when people are exiting the webinar. There'll be a choice for them to say, yes, they would like to opt in, or no, they would not.
Okay, thank you. Okay, all right, fantastic. If there's an opportunity that you'd like us to come talk with your leadership team, happy to do that. Okay, so let's bring this to a conclusion here with regards to the actual content on the next slide. And the next slide. Okay, great. All right, so fantastic. We made it. I think we're all looking for 2020 to come to an end. And as you saw at the very beginning, it wasn't, I know there was lots of personal trepidation and lots of our personal lives were impacted. But when it came down to business, the vast majority of people were still feeling reasonably good about meeting their targets. If you see Wall Street, and some of the equity markets, they're ending on, all-time highs right now. So I think there's some enthusiasm. I know we got some tough times to get through over the next few weeks, and stay safe is my encouragement. But there will be an end to it. And as you saw in our quick poll earlier, the overwhelming majority of folks here, and our thoughts as well, is that the second half will be very, very different. In fact, we may be complaining about having too much activity and change and opportunity come to us at the second half of the year. I think about that often and saying, we're going to go on from challenges of the world slowing down to the challenges of the world accelerating beyond belief. As Jimit said, digital is moving from pilot to program. If anything, this set of crises has encouraged us to accelerate some of those things that we needed to do, but we use this opportunity or use the crisis to accelerate those and move those into reality. As we talked about, the talent focus is moving from a quantity to quality. And I think, there will never, ever be an issue of I have too much quality talent, though with the unemployment numbers being higher than in the last half of this year, especially, it could be that we actually return to that in the second half of 2021. So, my encouragement with organizations is to think about how they're going to scale up in the second half of the year, if it really is as enthusiastic and a rebound once we all get our vaccinations and our Superman capes on. We're going to be looking for lots of good people. Sourcing momentum is accelerating. Jamit talked about that. I'm, in our conversations, just everywhere we talk about it, people have, they used second quarter was shock and awe of what do we need to do. Q3 was we know what we need to do, and Q4 has really been about I'm putting that to work, and it just takes time to make all the changes or do the deals in the outsourcing context that we need to do. And we're starting to see that in the book-to-bill ratios, and we're going to really see it in the Q. Probably we'll see some of it in the financials in Q4, but we will certainly see those things coming into focus and hit the news wires, if you will, in Q1 of this next year. So that should be pretty exciting. And if you're thinking about doing a deal with a service provider and you're on the enterprise side, my encouragement would be get going, because the window of opportunity for getting a great deal may be closing. And then finally, as Eric was talking about the operating model, everything is on the table. It's always good to have a cleansing event in some regards in terms of, hey, we need to do the reset, and I think people are pretty clear that they're making that happen. So with that, I want to close out on our final slide here and move to Q&A. So Pentup Optimism, I would say get ready for it. While there was probably some beaches that look like this year, I think most of the beaches were pretty deserted. My personal encouragement is I think that second half of the year is going to be really busy. So I personally think that you won't be able to find an airline ticket that at least going to nice destinations, it will be very difficult to find hotel rooms. And my projection is that if there's a nice piece of beach out there, there will be a human sitting on that sand. So get your airline tickets, make your reservations early, because I know I'm planning. I was supposed to be in Cancun last week. I didn't make it, but I know I'm making plans for the second half of next year to be there again. So with that, we want to leave a set of optimism in there and hope that your family is safe over the holidays. And reminder, it's not over yet, but hopefully good things are to come. So, all right, so let's open it up to questions and answers. Jamit, there's a question here regarding the talent and the coming out of the universities. Do you think that's going to have an impact with them losing basically going to online? Do you think that's going to have an impact on businesses as they come out into 2021?
Yeah, so I think the question was, hey, the actual learning is cut by 25% versus normal years. So what's that going to do? And I think, yes, there will be some impact, but where this truly applies is for entry-level employees that are entering the workforce. And for most of them, beyond university, there's a finishing school that the companies, either service providers, GBS organizations, put them through. So I don't think that finishing school will go away. I do see that so I think there's two parts to it. From a technical perspective, I don't think we are seeing a lot of loss in terms of the virtual learning environment, even for the entry-level graduates. I think it's the aspect of culture, team, context. I think those are the ones that are becoming harder to drive through in an virtual environment. But this year hiring was lower, so the impact of that's going to be small. And then, Michael, as you said, hopefully by H2 we can go back to some form of normalcy when it comes to having those sessions be conducted in the traditional environment. So might there be some loss? Yes, but we don't see that as having a lasting impact on employability of talent.
Yeah. Eric, there's a question here on kind of the, we had a big push from work from home, and I think we largely happened though that there's been some follow-on challenges with work from home. But I know you're doing a lot of things on the work future of work. So I know that's migrated. So how is the work from home migrated to future of work?
So I guess the first thing I'd say is, given how dramatic work from home was compared to sort of the conventional mindsets, many people have started kind of conflating future of work and work from home, and sort of future of work means work from home. And I think that's as people step back, they'll realize that's not true. And indeed, future of work should be a lot more than just work from home, although that the confidence people can have in considering that tool in the portfolio goes up. I think where what it has raised in a lot of the future of work beyond just the pure work from home is people challenging general conventional wisdom on how things might work, so that it in some ways has made it easier for people to communicate and interact with each other outside of traditional organizational constructs. So the senior person can talk to the more junior person without necessarily the people between them in the flow, and that in some ways is helpful. In other ways, it's unnerving. It's also meant that in some ways the cost of more people in a meeting, you want 5 people there, 10 people, what's the real cost of someone listening in? Some of that changes, and so the way you may have information flows and sharing, those things change. It also changes things like are gig workers potentially a more interesting avenue to get maybe specialized capabilities that you may need for 3 months, 12 months, 18 months, but you sort of rent the competency versus have to hire it and build it. So I think it's created a lot more creativity in the future of work, but I think there's also tremendous uncertainty in it because it's it has started and will further cause people to get very specific about what do they mean by culture. So often we talk about culture in terms of maybe values. So hey, we're customer obsessed. We're pro environment. We take care of our people. Those sort of things. But there's a lot of other elements of culture which are like just how do you work? How do you collaborate? How hierarchical are you? How do you share information? That this virtualization and digitization calls out, and maybe in some ways people's working ways are a bigger part of their culture than the poster on the wall. And I think people just end up thinking a lot more precisely about what is their culture, how do they design for it, how do they train for it, sort of how do they do culture by design.
Okay, great. All right, we have another question here. I'm just going to read it here. Jamil, I think this is one that you and I have talked about before with clients. Have any clients asked for discounts if they are willing to consider work from home options, since it helps the service providers reduce their overall infrastructure cost?
Yeah, no, I think that's a legitimate question. We've definitely seen inquiry on this. Some of this comes down to how sustainable people want that model to be, right? So I think the clients that are not going down that route are the ones who want to go back to a secure infrastructure environment. But just like we've had offshore rate cards, onshore rate cards, and rate cards for tier 1 cities are different from tier 2 cities. I think what we'll also have over time, and we've seen that in a few places, is discounts being structured for a work from home rate card, right? You see that in the contact center environment, and I suspect that this is going to be in some ways the new normal. Companies, however, who expect to not avail of this at scale, I don't think they are the ones who are going to be leveraging this significantly. I think the other part of the question, and I'll just take a minute here because I think there's a bit of comments here. How do you defend against that? You don't, right? This is supposed to be a partnership. The first part of COVID was fascinating. We really saw buyers and suppliers partner together. What we'd like to see continue happen is that same spirit of partnership continue, and you do what's fair for each side. So hopefully, that's the sentiment with which we get into next year as well.
Yeah, I think the second half of next year is going to be really interesting. We're gonna have lots of things to really think about. Once the vaccinations kick in and people, kind of want to cut loose, I think you're going to have that attrition rate we're going to have to deal with. We're going to have to deal with the business model around work from home. We're going to have the acceleration of projects that were started as a result of, hey, we need to accelerate digital. I do think that second half of the year is going to be way different in terms of the talent conversations and the sourcing dialogues. And I think, again, I don't know that we're all going to get back and do business trips like we did, but I think the services organizations, anything services oriented is going to be in hyper growth mode again. Probably people looking to get back and get their little piece of normalcy back. So look for a pretty exciting second half of the next year. Let's just survive the first half, but the signs are in place, and we can start to see it in the numbers, but people need to have that agility, the ability to go with the flow, if you will. So anyway, I want to conclude with that, and thank you for your time. And if you have any questions, and if you're interested in a briefing with your leadership team on this, I'd be happy to just help facilitate that. So let us know, and thank you for your time.